All right, guys, back to work tonight. Holiday is over, unfortunately. Hope you all had a fantastic holiday weekend, but it's time to get back to work tonight. It's Tuesday evening after all, the third week of the month of January. It's going to be a busy week this week, and I want to make sure we are ready for all the best setups for tomorrow and the rest of the week. As always, if you're tuning in for the first time tonight, my name is Joseph. It is great to have you with me here tonight. My job tonight is to help us find the best trade setups for tomorrow. That's Wednesday's trading session. I get a fantastic video in store for you guys and gals tonight. Charts are all prepped up, as you can see here on the screen tonight. Got the E-minis, we got the oil, and we got the gold on our radar for tomorrow. Now, speaking of tomorrow, everything tonight, pretty much everything, is bullish into a range. Bullish into a range. Bullish into a range. Lots of bull markets right now, but lots of range-bound markets. Now that range might be a telltale sign of what's come tomorrow, because I'm sure you noticed, right? Monday was a holiday, but the markets were actually open. So when the banks are closed and the schools are closed, right, but the markets are open, we kind of call these half holidays. And those half holidays, we have what's called the snapback setup that happens a lot in that kind of Tuesday, Wednesday, Thursday, when Monday is a holiday. So, you know, to keep it simple here this evening, we got a bunch of bull markets, a bunch of ranges. I would love to buy some pullbacks, right? I'd love to buy some pullbacks on the gold, right, on the oil, and of course on the E-mini S&P. We got some levels overhead, so we're definitely looking for breakouts as well. But pullbacks and breakouts are definitely going to be on our radar tomorrow. Will we get the snapback? And if you don't know what the snapback is, I'm going to talk all about why the snapback works, what to look for tomorrow, and we'll talk about the best setups as we go into these charts here in more detail. So will we get the snapback? What is the snapback? We're going to talk a lot more about that as we dive into these charts here right now. Before we jump into the charts, though, let's just make sure we know what we're dealing with here for tomorrow. Grab a look at the news worksheet here, courtesy of econoday.com. This, of course, it's technically not I guess it's not the third week of the month. It certainly feels like it, right? The first day of the month was a Friday. So it's pretty much, as far as I'm concerned, the third full week of the month. We did have OPEX the third Friday of the month last Friday. So we do know, of course, this is kind of that third full week of the month. The most important thing, though, that you want to be aware of this week is this is the first week of earnings season. Now, earnings season is a 3-week process. It usually comes just after the end of the quarter, right? So the end of the quarter is in March, right? We've got, June, September, and December. So it's the month after, right? So it's January, it's April, it's July, right? And, of course, October, right? If I get my math correct. So it's a couple weeks after the end of each quarter. So here we are right now. All the big banks, all the big tech companies, all the big publicly traded stocks, right? They're gonna be over the next 3 weeks publishing their earnings reports. And these earnings reports will come out before the market opens. They'll come out after the market closes. And the reason why I tell you, because we're futures traders here, at least on this nightly newsletter, is because you will see an increase in volatility whenever we go into earnings season, right? So beginning of the day, end of the day, as traders start to position themselves in the stock market. And what do? They use the futures market for hedging purposes, right? Or potentially just trade in the straight futures market like the NASDAQ, right, during the tech earnings in a few weeks. So be aware of that. As we look at the rest of this week, we're going to be looking through this through a lens of earnings at the beginning and the end of the day. Now, it's not that big of a deal to pay attention to the individual stocks, but be aware this week, expect an uptick in volatility as we go into the third week of the month. Now, of course, Monday was a holiday. Tuesday is behind us. Wednesday, of course, is tomorrow. There's not a lot of, let's face it, there's no news on the schedule tomorrow. We get the housing market index at 10 o'clock Eastern time. Tomorrow, of course, is Inauguration Day here in the United States, right? President-elect becomes President Biden here in the U.S. And that's probably one of the biggest variables as we go into tomorrow. No, I'm not talking about the actual inauguration. It will likely be a non-event tomorrow. What I'm talking about are the new people right, being announced. Today we heard from Janet Yellen, right? We've heard her before, right? She was the Treasury Secretary. Was she Treasury Secretary? No, she was the head of the Fed, under President Barack Obama. So we're going to see some new faces. We're going to see some familiar faces come in. So new cabinet members. The reason why that's important for us is because, well, you saw today, once Janet Yellen began speaking today, right, the markets reacted. So new people the Biden administration will be putting into place here. That is definitely a variable for tomorrow. But as you can see, though, there's not a lot for us, right, to really latch onto right here tomorrow. So pretty much a wide open space for us to trade with tomorrow. I'm anticipating a very good rest of the week here. We had a fantastic day today in our trade room, and I'm looking forward to Wednesday, Thursday. I got plenty of news on Thursday and Friday, but as you can see, wide open here tomorrow. So we'll jump into the news for Thursday and Friday in tomorrow night's newsletter. But be aware, no major news tomorrow. Inauguration day, right? Hearing more from new cabinet picks, right? From the new president-elect Biden here in the U.S. And again, Monday was a holiday, right? Monday was a holiday. Let's talk about the snapback, right? Shall we talk about snapback? Let's talk about snapback. So Monday was a holiday, right? And anytime you have a Monday holiday, right? Let's just call this, here's Sunday, right? So we go into Monday, and a lot of times on a Monday holiday, right? This could be Martin Luther King. This could be Columbus Day. There's probably more. A missing President's Day comes to, you know what I mean? There's a lot of these Monday holidays where, the banks are closed, the kids are out of school, but the markets are technically open. And so what happens is we oftentimes see these kind of low volume. They're kind of difficult to trade because you don't get a lot of good setups, and most of us are doing something else on those holiday weekends to begin with. Then we go into the Tuesday, right, that follows afterwards. Now, this is what I'm talking about when I say the snapback. What's going to happen is a lot of people are going to come in on Tuesday morning. They're going to see where we are. They're going to see where we were. And they're going to say, what the heck, right? This is too high to buy. What they're going to do is they're going to say, well, give me something, right? Give me something better, right? If I can shorten that, right? Give me something better. And so what this does is it creates this kind of phenomenon. You probably saw it today, right? We saw a couple of times today where the market goes sideways. The buyers tried to run, but they ran out of gas. You know what I mean? They ran out of ammunition. And this is really starting to pile up now because if these buyers, if they can't get something going for tomorrow, we may see a really deep pullback. Again, I use the term snapback because what usually happens is it's almost like a gap fill, right? Where it's like they take out the gap and then all of a sudden they go, okay, let's do it. And let's go right back to where we were. All right. So that's what I'm talking about when I say, can the sellers get the snapback, or better yet, can we be ready for and anticipating that snapback and be ready to buy it, right, at these lows? It's always a bit tricky to time your entries on the way down because you never know you never know how far it'll go. What I always try to do in these situations is, unless of course it's a major reversal, which we'll talk about in a second, but I always look for those setups, right, to buy it after it takes out that low and then get that insane risk reward ratio as it snaps back up right into those ranges. So that's what I'm talking about when I say snapback. And you're going to see a lot of these tonight on the chart. S&P's got one, oil's got one, gold has one as well. All right, lots of bull markets, lots of ranges. Will it last as we go into tomorrow's trading session? That's the big question on our radar right now. Here we go. Let's jump into the S&P right now. You can see right away, there's your Sunday. Right? There's your Sunday. There's your little Monday, right? It's a small little guy because, again, it was low volume. And then here's your Tuesday, right? That was today. So here is the low from Monday. We see that big, not a huge rally on Monday, but you can imagine a lot of people woke up from their holiday weekend stupor, right? We all kind of get lazy on holiday weekends. I was working all weekend personally, but you know what I mean? We wake up, right? We come back and we go, what? I don't want to buy way up here, right? I don't want to buy way up here. So buyers start to find ways to buy nice and low. This is where things get interesting though, because you'll notice we mark up, right, that pendulum swing. these buyers, they had a lot of momentum going. I'm really surprised they weren't able to blast right through those highs here. So what I'm thinking is we might be in store here for a relatively deep pullback, right? Give these buyers, something to buy nice and low. And so you want to be kind of keeping an eye on that as we go for tomorrow. So here's what I'm thinking. It's a bull market into a trading range, right? That's all this is. The key takeaway right now is it's a bull market into a range. The buyers want to buy at support levels below the range. All right, you can see get some support levels marked up below the range. Sellers, right? Sellers want to get short with reversal patterns off the highs, which we'll talk about in a second, or they want to look for a reversal, right? So sellers want to either sell above the range with what we call a crown reversal pattern, or they want those 1, 2, 3 reversals to try to bury this low, right? I can make that low a little bit higher there, right? But that's going to be a good idea where the bears want to go, right? The buyers want to buy below the range, sellers want to sell above the range, or we can look for breakouts. So that's the key takeaways on this. Now, as the market goes higher, right? Let's talk about bullish. Let's talk about bearish. Let's start first with the bull side here, right? The bulls have control here. Now, looking upstream here for us, there's a weekend gap up there. Not this weekend, but last weekend, if you recall, right? That was the Sunday the Friday to Sunday gap. This is nothing new. We talked about this gap right in last week's newsletter quite a bit. That you have to think is the big magnet for the buyers. Now, how do I buy it as it breaks out higher? How do I sell it as it breaks out higher? Well, one of the easy ways to buy this would be if we see a strong run higher, I can grab a trend line off these highs, I can mark that low, and I can buy off of that low. Now, usually what's going to happen is this will look like this. It'll run up, pull back, sellers will try to get short, right, below the moving average, and we can buy into stop loss with a failure pattern, and we can buy a pullback combination. Seller failure, right, into bullish pullback, targets, of course, up top, right? We call these 1, 2, 3 breakout patterns, right? I call this 1, 2, 3 breakout into a hidden channel pullback. Usually what it is, though, it's a seller failure into a bullish pullback as we go higher. Now, every once in a while, you'll get a gift, and you'll get this really strong jump up. You'll see a shallow pullback to the moving average, a higher high in price, and that will tell you right where to look for the entry, right there. Right, we call these 2-try breakouts, right? 1 try, 2 try. The giveaway on this is the shallow pullback. Strong move up, shallow pullback, higher high in price. That's another beautiful setup here. And as always, I'm always trying to incorporate these off as many reliable support levels as I can. We call these 2-try breakout patterns, all right? So now we got a couple ideas how to buy this thing as it breaks higher, right? Weekend gap, that 24.5 there, it's the all-time high if I recall, right? That is a new all-time high, fresh all-time highs there right at the beginning of the new year. Now, it is a range, and as I mentioned earlier, ranges are going to act like magnets. So if we know there's a range and there's a magnet up here, can I sell up here? Can I sell into these highs? I definitely can, but here's the problem. Momentum is the problem. So if I go up into these areas of resistance up top here, how do I get short this market? How do I get short? I've got to give the buyers the benefit of the doubt, first of all. So I have to let them try a couple times, right? Once, try twice. And one of my favorite setups when I'm trying to go against the trend above a range, that's the key here. It's very bullish right now, so I don't want to get too aggressive on this. I want to let those buyers, kind of dig their own grave, right? Without a better use of a better term there, right? Let them try once, let them try twice. I love that trap. Right? I love that trap overhead. Sometimes what will happen is it'll come up, right? It'll pull back once. It'll kind of grind lower here, and we'll grab that trend line there, and see what happens, right? Sometimes this pattern could be a lot more drawn out, right? In fact, it almost looks like we might get something like that right here, right? So that's another example, just a slight variation of that pattern, right? It may not be instant. It may take, an hour or so for that pattern to set up. Now, again, we call these crown reversal patterns. And I'll tell you, I love crown reversal patterns. In fact, we talk all about reversal patterns and breakout patterns in our free trading classes here at School of Trade. If you haven't done so already, you definitely should grab, I'll put a little link up there, the pop up there, make it easy for you. But definitely register for the free trading course. That way, when I say 1, 2, 3 breakout or crown reversal or failure into pullback combination, you'll know exactly what I'm talking about. I go over all the rules. I show examples of the chart patterns. You'll learn everything you need to get the most out of our time together on this nightly newsletter. Not to mention, you'll be ready to go when you come out and join us every morning in our trade room. So grab that link that popped up there. Get registered for the free trading course. That way you'll know exactly what I'm talking about when I'm using this terminology going forward. Now, as the market goes lower, don't forget, stay out of the middle, right? The middle of a range is where good pattern setups go to die. Stay away from that trading range. Then, as we go lower, right? Remember, buyers want to buy at support levels below the range. I have what I think to be a pretty good looking trend line coming up off this low. Here's my problem though. Here's my problem. If we run into that, let me get this different color here. If we run into that trend line now, what I would normally do is I would look for sellers to try to get short off that moving average and buy into their stop losses. The problem is though, as you see back here, if that failure pattern puts you too close to being inside the range, it oftentimes gets kicked back against you. So in these situations, rather than just simply get aggressive buying stops, because this rising support trend line puts me a little bit close to that range here, I like to use trap entries to avoid basically buying too high. And it's kind of the same idea as that crown reversal, to be honest with you. We want to look for some way as we're pulling back to that support trend line. In this case, we have to assume that bears will probably be coming in and trying to get short, right, as they go lower. What I want to do though is let them try a couple times. Most importantly, look for a trap, right? Look for a trap. Now, these come in all shapes and sizes here, right? Sometimes they'll go back up, they'll run back up and come down, right? And that's, of course, a little more dramatic example of it. That's the key, right? The key is find a prior swing, right, and get long off of it. Traps are going to be my bread and butter tomorrow if we're using this trend line, right? Now, let's talk about the deeper pullback, because this is obviously where things get interesting, because I've got this trend line down here. So I honestly wouldn't be surprised tomorrow if we get to our desk tomorrow morning, the market has collapsed overnight, and we're now simply looking for those bears to 1, bears to 2, looking for the bears going to tire themselves out so we can buy this thing going right back up. This is where that snapback really comes into play, right? So I would love to see a very deep pullback here, but what's the problem with the deep pullback? See, a deep pullback is great for risk reward, right? A deep pullback allows me to risk small, right, for a nice big reward, but with that deep pullback, you pay a price, and that is momentum. So as we go lower here, first of all, how would I buy it? Right? It collapses, it takes out these lows, we're running into support levels down here. How do I buy that? I definitely don't want to be too aggressive getting in. I want to give the bears the benefit of the doubt. Let them try once, let them try twice. One of my favorite setups is to draw a trend line off that low, or even better, draw it backwards off that high, off that low. One of my favorite setups, and watch closely here, because a lot of times when those bears, when they try a couple times on those really deep pullbacks, we oftentimes see this market snap higher and really run. And I like to look for a trap pattern below that low. So think about how this is going to play out, right? So you've got your failure. We call those nested failure patterns, by the way, right? They're a little bit different because they really go lower, right? Regular failure patterns are great when you're not worried about momentum. When momentum's a really big problem, like it would be if we really get this thing to tumble here, then what you want to do is let them wrap that rope around their neck, right? Don't just simply look for a V bottom, right? V bottoms are difficult to time the entries. Wait for those bears to commit. You know exactly where their stops are. are, right? Look for a nice strong signal, and we can buy right into those stop losses. The second thing I want you to remember is oftentimes these things will run, right? They will really cook off those lows, because as those sellers get stopped out, the market races higher. Don't chase after it, right? One of the most important lessons I've learned as we go back into a range, don't chase after it. What I always recommend is buy underneath the range, and usually the best follow-up setup after a nested failure like that is going to be what's called a bear trap, right? It's a trap low below that low. And again, if I can find some sort of hidden channel there, bingo, that's a money trade right there. That's a great looking setup. So that's kind of my idea here, to be buying this as the market run, and it really collapses as it goes lower. Now, what would a reversal look like? At what point when the market runs lower do I start selling? Well, look back at this one, right? Say the market runs lower, the bears had to get short and they stalled. Yeah, the bears have to hold that pullback. So if I can get a really deep pullback here and get these bears to hold the pullback and jump off that moving average, right? What do we call it? 1, 2, 3 reversal, 1, 2, 3 breakout, right? By the way, same pattern here. 1, 2, 3. Right? What do? Mark the high, mark the low. I love trading breakouts. I love breakouts, but I'm not going to trade the first pullback, right? We don't try to predict breakouts. We wait for breakouts because range-bound markets in liquid markets like the S&P, breakouts are more likely to go up, fail, and come right back into that range here. So if we can see a strong move down, if those bears can sink their teeth into that moving average and jump off the EMA, what do we call this? 1, 2, 3 breakout. Again, gotta be stronger than a deep pullback, right? Deep pullbacks are not enough to want to be a seller, right? Hold the pullback to the moving average, jump off the EMA. Once I have that done, I can now mark that low. What I usually do is look for a combination off that high, right? To define that hidden channel there. And again, oftentimes, this will be above the moving average when it pulls back. The buyers will try, and that's the writing on the wall right there, right? A 2-try, in this case, buyer failure pattern off the high of that channel. And again, where do we think these bears want to go? Oh, we know exactly where they want to go. They want to go back down to that low, right, at basically 46, right, to be safe. Buyers want to get back to fill the weekend gap, not this weekend, but last weekend at 22. Stay away from those middles, right? Buyers are buying underneath the range. Sellers can get short off the highs with crown reversals. And again, guys, I talk about all of these setups in a lot more detail in that free trading course linked up in the upper right-hand corner. Not to mention, don't forget, if you want to come out and trade it with me tomorrow morning, we do it together every day in our trade room. What I'll do is I'll put the link you need to join up as a new member and get into tomorrow morning's trading session, 8 o'clock Eastern time. Grab the link in the description of this YouTube video, and don't be late because we kickstart things tomorrow morning bright and early with earnings coming out. All right, we're looking good. I like what S&P is saying right now. How about some crude oil? Now you're going to notice a lot of similarities here, right? A lot of similarities on the oil. What's the key takeaway on oil right now? Oil's definitely bullish. There is definitely a range up here. More importantly, though, you'll notice we are 1, 2, 3 legs up. Now, we talked about this today in the trade room. Trends like the number 3, right? Most trends have 3 legs. So, I wouldn't say always have 3 legs. There's always exceptions to every rule and everything in life. But typically speaking, though, when a market goes 1, 2, 3 legs, it's not surprising to see it go sideways in that trading range. Now, remember, right? We got that holiday, right? That holiday session, not as dramatic as a market like gold or a market like the S&P, but now anticipate, right, if we're looking at a snapback, right, for tomorrow, where would you think those buyers are going to want to go? They're going to want to go back down, definitely into that area right here. In fact, I mean, you almost could say that's one buy zone, right? There's another buy zone right there. You know what I mean? You could look at it that way here. What I want to do, though, is I want to be ready for the pullback, be ready for the shallow pullback, be ready. Hopefully we get the deep pullback. That's what I really want here for tomorrow. So we're 3 legs higher. We are definitely into a trading range. There is no doubt about that. Buyers want to buy at support below the range using seller failure patterns. Sellers, of course, they would love to go up to these highs up here and get short off the highs, right, with a reversal pattern. We call them crown reversals, right? If we get a breakout, right, breakout patterns, we know where the bears are trying to go. Breakouts going higher. Where's the next leg higher? There's a big bullseye right there, just below 54, 53.87, 53.96, right? That is last week's high there, last week's highs, I should say, and those will make for an easy magnet for the buyers. So we want to stay out of the middle, right? The range is a magnet. Buy low, sell high, and respect momentum, right? Respect momentum. Now, once again, as we mentioned earlier, right, a strong break higher here, right? Strong break higher. If I see a strong break higher, I'm going to immediately start looking for that 2-try trap, right? Strong break higher, shallow pullback, higher high. I don't want to chase after the breakout. Okay, why? Because this happens, right? That happens. That's why I don't chase the breakouts, right? You might be wondering, well, why don't we just buy it, right? Once it breaks out, well, if you buy that one, you got to buy this one. You got to buy this one. You see, it's not. I know they look good in hindsight. It's this little trick that our minds play on us. It's called survivorship bias, I believe is what it's called, right? Because we've seen breakouts happen before, we only remember those successful ones, right? Survivorship bias. Little psychology lesson for you guys here. So it's not enough to get a strong breakout, but if I can see a strong break, let me zoom in a bit closer on this. If I can get that strong break higher here, and if I can get that shallow pull, that's the giveaway. The shallow pullback, strong breakout, shallow pullback, right? Once you get that, bingo. Now you know exactly where pros are getting in long. They want to get in right below that low, right? Right below that low here. And again, like I mentioned earlier, if I can, I'll try to combine that off the low of a channel. Not always an option, but it's definitely something that will kind of beef up the odds of success on that. And then also, too, 1, 2, 3, right? If it jumps higher here, I would have no problem there marking that new channel, marking up that high, marking up that low. Moving average comes over. Again, when you're looking at a deeper pullback on a channel like this, think about that deep pullback, the low of that channel. That gets us underneath the moving average. Look for bears to try to get short. Once they do, you got them right where you want them, right? Now you know where their stops are. Now you know where they start ringing the bell, right? Give me out, give me out, give me out. We can buy right into stops. And then again, hopefully we'll get that pullback for that, what we call a failure into pullback combination, right? Again, we talk about these patterns a lot in our video classes. Our free trading course linked up in the upper right-hand corner goes over all of it, all right? Now, what if I want to be a seller? Well, I'll tell you, this is a great spot to be a seller because we're 3 legs up, right? Great spot to be a seller. But what's the problem? Momentum, right? Momentum is the big problem. So first of all, I have to make sure I take out these highs. Then I look for the bulls try once, the bulls try twice. And the trick is you want that trap, right? You want that trap. That's the key. Okay, you want the buyers to try a couple times because, you're going against the darn trend, right? So you want to give them the benefit of the doubt. You want that trap because that's the safest place. That's the safest place to get short. Whatever you do, you don't want to wait too long and get short as it's going lower. You know why? Because now what happens is oftentimes what will happen is it will do this, right? It'll run lower. You'll then see a new channel come over. And right as you're chasing after it goes lower, guess what? It pops back up, stops you out, and then tanks right off of that high, which is another follow-up setup we always look for, right? So sell off the trap, right, off the channel. Now, obviously, this follow-up setup, right, off that hidden channel now, got to make sure you're not going to be in the range, right? So, use that as your guide tomorrow. But that's why you don't want to chase it as it goes lower, right? That's why, for example, I don't like taking reversal patterns like this, right? Going back down like this, right? This is a pattern you could look at too. The problem is though, that's the same idea, right? Those are buyers trying twice. But now here's the problem. If I sell short here, what's the problem? I'm selling low. I'm not selling high, right? What'll happen is that price will go lower a little bit, right? But then it will kick back up, and that's where professionals are waiting, right? They're waiting for that pop, right? They're waiting for that chance to get in selling high. That's a trade I'll wait hours for, right? And in fact, today, right, in the trade room today, we literally had to wait a couple hours on the S&P, right, to finally get that set up this morning, right, on the buy side. So we definitely have some options here going short off the highs, but again, we have to respect momentum, and we got to make sure we are selling as high as we can. All right, now, again, stay away from the middle. Right? Stay away from the middle. If we sit there tomorrow right in the middle, you're going to sit right on those hands, right? And wait for the pullback. Now, when we do get the pullback, buyers are looking for support levels below the range. Okay? We talked about this earlier on the S&P. What's my concern? It'll be a bigger concern if the market goes sideways for a bit, right? And then comes down. What's my concern right here? I'm buying too high. Who says I'm buying too high? The range says I'm buying too high, right? There isn't a very good risk-reward ratio inside that range. I'd rather get a deeper pullback, right? Risk small to earn much larger. But again, do I have options here off the low of this channel? First of all, I like this channel. This channel really makes a lot of sense to me. I like how these lows line up. I love how the highs look. I do like how we haven't tested those lows. This will catch a lot of people off guard. The problem is, of course, is that if we don't get going quickly, right? If we don't get pulling back quickly, if the market sits here for a while, then we pull back, my problem is I'm buying too high. What is your solution to avoid buying high? Traps. Right? Buying high or selling too low. Trap patterns. Let the bears try once. Let the bears try twice. And again, traps, they're very easy setups here. And again, it's not so much the two tries that I'm after. It's just more of finding a way to get in underneath a swing here. Right? I know I want to buy down here. The problem is, though, I don't want to buy inside the range. Now, sometimes what happens is the market will go in, it'll go one, it'll go two, and you'll have to kind of thread the needle there a little bit, right? Getting in underneath it there. So there is obviously going to be some variation of that, but traps are going to be your key on a relatively shallow pullback. If I had it my way tomorrow, if they called me this afternoon, tonight, and said, all right, Joe, where you want it, buddy? I would say, give me a pullback, 52.46. That is a beautiful spot on this chart because A, it absorbs that snapback, right? It allows for that snapback. And B, as you can see here, it is one hell of a level, right? Lots of resistance holding, lots of support holding. So, I would say if we can get down to this area here, 55 to 46 tomorrow, I'll be a pretty happy camper here. Now, keep in mind, as this market pulls back, we're going to be watching closely here to see how momentum feels, right, on the pullback. For example, if this thing just shoots running lower, right, that's when obviously I'm going to have to be disciplined and wait for one, wait for two, mark up and find a support level to get long off of. So if they completely take out that level, again, there's that kind of snapback idea there. But if we pull back though into that, 55, 50 area here, there shouldn't be any reason why we can't be looking for a seller failure, right, into a bullish pullback combination for a rally going back up to retest the high. Now remember, that trading range is a magnet. I can measure the amount below the range, project that at the high of the range, and I can anticipate where that kind of big objective will be later in the session tomorrow, right? Remember, you always want to take a bulk of your profit off at the top of that range, and then if you got an extra runner, right, leave that runner for the pendulum swing as we go. Again, a failure, a seller failure into a bullish pullback and a rotation back higher here. And again, if we really collapse, how do the bears take control? The bears have to hold that pullback and jump if they can. And I hate missing that pullback too, right? But a sharp pullback is not enough to qualify this as a reversal. You probably have already learned this already, right? Or maybe you haven't. Welcome to the party now, right? Now you know most reversals fail, right? Especially in trending markets or bullish markets like this, most reversals are going to fail. You got to give the buyers the benefit of the doubt. Once we get that 1, 2, 3, and we get that strong jump off the moving average, perfect. Now I can mark that low. Again, I try to go up a little bit higher up the ladder here, find those hidden channels, get above the moving average. Buyers try, ends up being a buyer failure into a pullback combination. And I remember, I'm just simply drawing on the screen right now, but failure into pullback combos, very, very common. We'll be looking for that tomorrow morning at 8 o'clock Eastern time in our trade room. But don't forget to grab the free course linked up in the upper right-hand corner. All right, guys? And then again, if it really collapses down like this, don't just try to buy it and don't try to sell it right away, but give the bears a couple swings, right? Let them try once, let them try twice. If I can get a trap down here, right, kind of a crown reversal set up, it's just a deep pullback with a trap on it, that would be perfect, right? That would be ideal. I can trade off the low of that new channel. I can, of course, trade the trap. I can buy into stop losses. We'll talk more about the nuances, right, of this setup in our free trading class. And, of course, the trade room tomorrow morning, there are lots of ways we can trigger the entry here as it snaps back higher. And then, again, don't forget, a lot of times, this will really snap. Don't chase. Best way to keep the stop losses away is to trap, right? Best way to avoid losses are those traps. And so if we get the failure down here, right, then into that strong move higher, look for that trap, right? This would be what we call a nested, right, a nested failure pattern, right? Again, bears try once, bears try twice into what is basically a bear trap on that way back up. And then again, I can mark the amount below, I can mark on above, right? Symmetrical move there, and that will give me a projection as far as where we're likely going. Maybe not tomorrow, but maybe on Thursday, right, as we come back and look at the continuation there going higher. All right, we know where the market wants to go if we break out. We know where the market wants to go if we get a reversal. Our biggest challenge right now is stay out of the middle, right? Stay out of that middle here. All right, oil, we got you ready to rock and roll here. How about some gold? Finishing up here now on the mighty yellow metal. Well, it didn't look too mighty today, did it? It certainly didn't. You can tell gold is maybe paranoid right now because you got the inauguration tomorrow, lots of new people coming into the cabinet, right? So, we kind of have a conflict of, monetary policies, the outgoing Trump administration with the new incoming Biden administration. So this, there might be a little bit of analysis paralysis right now happening on gold right now. So what's the key takeaway on gold? Now, I don't want to sound like a broken record, but I'm doing it anyways, right? We have a bull market into pretty much a trading range. Now, it does look like there may be a sniff or two of a spike in channel here, right? Spike up, pull back, higher high, pull back. But here's where you know it's not a spike in channel. That leg up right there. If this was a spike in channel, it would rotate higher, right? It'd be rotating back and forth. This, in my eyes, at least for now, is a range, right? If it wasn't a range, we wouldn't have held that top. Right? If it was a spike in channel, it would be, right, it would be rotating like a good channel should, right? It would rotate back to the high. And then usually once we get 1, 2, 3, that third one is the deep pullback. Now, spike in channels, I talk a lot about these in the free trading course, our intermediate classes here at School of Trade. Spike in channels are a top 5 chart pattern, in my opinion, because they're very consistent. You want to think about where does the spike and the channel come together. That is 9 times out of 10 right where buyers, the big boys and girls, right, professionals, are waiting for the pullback. All right? So if it is a spike in channel, it sure as hell is looking like a really good spot to buy around that 25.6 area. You'll notice I've also got these highs marked up. I marked up that low, right? Got a little bit creative down there, shaved off the wick, grabbed a little bottom there. That is right in that same spot. So if I had it my way tomorrow, that would be where I'd like to get that pullback, right? So that's why I have that battle zone written up where it is. That 17.1 level, it's that prior low from last week, right? So this area right here has to be seen as a very desirable spot for a buyer. Now, you'll notice, right, I got my strong move up, anticipating that pullback, right? And that gives me now my measured move. Look where that measured move puts us, by the way. Right back up at those big highs, right, from last week. So last week's highs could easily be a magnet here for the buyers. So now you kind of know what I'm looking at here, right, as far as my levels go here for tomorrow. We're bullish, right? Get a trading range in the chart here. Buyers want to buy at support levels below the range. Sellers want to sell at resistance levels above the range. I'm going to buy down here with seller failure patterns. I'm going to sell up here with crown reversal patterns, right? And again, you'll learn a lot more about those in the video course, but I want to make sure you know what setups, especially if you're a client of mine. I want you to know what setups we're tracking for tomorrow. So when we get into the trade room tomorrow morning, you'll know exactly, right, what I'm talking about. Okay, now, a lot of this is going to be the same as the prior charts, but in this chart, though, we got one bigger problem. We don't have a lot of space overhead, right? There's not a lot of space overhead. So, and not to mention, we don't really have a very good 1, 2, 3 breakout pattern, right? If you go back to oil, oil, I could easily see that 1, 2, 3 move. You can easily see that. Plenty of space overhead. S&P, right? S&P, same thing. Plenty of space, right? Overhead. The gold, not so much, right? Not so much. We got that top up there. So right off the bat, what do you think is my plan? As the market goes higher here, I need to I got to get a real strong move because the range acts as a magnet. But if I get a strong move, what does that do? It puts me really close to that high. So you can probably already assume if we do get a strong breakout higher, yes, I could go out and, draw something like that and something like that. But I'll tell you, that's going to be a really tricky type of channel to use because it's going to basically be a V-top, right? It'll go up, come right back down. That's going to be a tricky one to use here. We might get it, but chances are if it's going to break out, it's going to go up, right? Maybe it goes 1, 2, 3, right? Maybe it just runs as we go. If I get a strong move higher, though, my concern is not momentum. Momentum is great. My concern is where we're getting long at. Knowing that, I've got to look for, you guessed it, right? Looking for traps up here, right? Traps could easily be a strong move up, shallow pullback, higher high, and a trap low. That is definitely when I'll begin to look for those channels to combine with it. Traps may also be a strong move up that fails at the high. We get a deep pullback, right? Almost looks like a reversal. Bears try once, bears try twice, right? This happens a lot on the gold, where we'll see that market almost like I hate to use the football analogy, almost like American football, right? That offensive line, right, pushes the defense back, gives them some space, you know what I mean? Right? So the bulls blast higher, that puts the sellers on their heels. But then the market V-tops, right, comes down. I don't want to buy that, right, that kind of, flash up and down. Bears try once, bears try twice. That is a fantastic way to use a trap as we go higher. So I will definitely be looking for those moves going higher here. But again, because of overhead resistance up here and that less than ideal open space, I'm looking for traps as we go higher. Could I sell this thing as we go higher? As we go up, you've got a lot of areas up here, right? A lot of potential resistance levels overhead here. I mean, I could have really littered this chart with a lot more of these, right, of these areas here. So we're definitely at an area where you could look for a reversal. But I'll be honest, if you look at this as a range from last week, this is the pendulum swing. This would probably be one of those markets where this is probably the last one I would want to take with a reversal off the high just because of where we are coming out of last week's trading range. Now, I'm always a big believer if it looks like a duck and it sounds like a duck and it smells like a duck, it's probably going to act like a duck. So I will be likely looking for some sort of half-size position off that high. We go up. I'm looking for the right? Buyers trying once, buyers trying twice. Ideal is that trap, right? Ideal is that trap off the high. Maybe we get lucky, get the little channel coming over the top there. But you want that trap, right? That crown reversal. And again, as I mentioned before, right? Sometimes it'll go up, it'll kind of one, and we'll grind lower here. So don't be surprised, right? If it takes sweet time there, just keep your eyes open for that pop up, right? It's a little bit different way to look at it, right? 1 try, 2 try, selling at resistance. So I'm definitely not afraid to sell short on this. What I'll probably do on this gold tomorrow is, unless it's a prime setup, is, when you're worried about this particular chart, you can look for maybe a half-size position or grab one contract, right? Just get some skin in the game off that high there. Also, too, as the market goes sideways here, we stay away from the middle. We know where we want to be a buyer here. As you can imagine, if the market pulls back for us, right, relatively shallow pullback, I can look for failure into pullback combinations coming off of that low, right? Nothing new there, right? Find those little hidden channels. Those are great ways to add more reliability to that setup, right? A failure pattern into pullback combination, one of my favorites. Or do we really plumb these lows? If we really plumb these lows, now we break out the nesteds, right? Wait for the 1, wait for the 2, grab that trend line off that low, right? And buy at support. Bunch of different ways you can do this. You can buy off that trend line. You can buy into those stops. What you don't want to do, though, is buy it as it's going higher. Why? Because as it goes higher, you're more likely now to see that little little head fake trap to give those buyers one last shot to get in before this thing rips back up to retest those highs here. All right, so not a lot of new stuff there on the gold, but I want to make sure that we covered that. And then again, strong move down into support. Bears hold the pullback, jump off the moving average, mark up the low, mark up the high. First test is always the best test, right? Off the high of that channel. And I know, I want to take the first pullback, but we know better than that, don't we? Right? We know the deep pullback, especially when Monday is a holiday, especially when the snapback is in play here for tomorrow. I don't want to get too aggressive on that first pullback. 1, 2, 3 reversal, and then short off the high of that channel. Where's my objective? The bears are going to want to get back down to retest the 1800. They're more likely here to be somewhere down around this area here, right off of that low. It's almost like a false bottom there, right at that low. We'll know more tomorrow once we get things opened up in the trade room. Speaking of the trade room tomorrow, I hope you'll come out and join me here tomorrow. 8 o'clock Eastern time. We open the trade room up every morning, Monday through Friday. Would love to have you there with me. Getting registered is very, very easy. I'll put all the important links you guys need in the description of this YouTube video. So get registered for tomorrow morning's trade room, 8 o'clock Eastern time. Would love to see you there. Don't be afraid to call the office if you guys have any questions. We got live chat. We got toll-free phone numbers. So if you got questions, I'm always standing by. Don't be afraid to drop the questions in the comment section below. Thank you so much for tuning in. Hit that thumbs up button for me, right? Hit that subscribe button for me that we don't miss tomorrow night's newsletter. But that's it for me, guys. Have a wonderful rest of your day out there. It is great to be back with you guys here for the third week of the month of January. We'll see you guys tomorrow morning. If not, we'll see you tomorrow night in the next edition of our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.